Check, check. Testing 1 2 3. Testing 1 2 3. All right. Looks like we are ready to roll. Okay. Good evening, everybody. Hopefully, everyone had a good day. Want to come back and kind of do a quick market review of what happened today. I was in meetings all day, and I actually have to hop on another meeting in a little bit. So I will be making this a little quick. So it should be a short one here. So let's go ahead and head to the charts so that we can get you going, and let's get rolling here. So first of all, thank you for the folks that came in today to the stream. Really appreciate you. Had some really good teaching moments during today's price action, and we're going to review some of those today, but we're going to take a look at tomorrow first. So 8:30 in the morning, we have building permits, housing starts. Those can lead to a little bit of inventory, typical news start of the day. If you trade oil, 10:30 a.m. oil inventories is always a good time. And the rest of the day, it's just FOMC speakers. So be careful tomorrow. I would not be trading in the afternoon session if unless something looks like really, really good. Just anything that these FOMC speakers say could like move the market. Not like insanely much, but it can certainly stop you out. So be careful tomorrow afternoon. Let's take a look at today. So today you ended up seeing a few trades that I ended up taking, and I was fortunate to have a break in between some of my calls to see something in the charts. It happened to line up at the exact same time, and I happened to take it. So we're going to talk through some of the ones that we would have taken today. So let's take a look at the first one that I want to bring forward that many of you have seen me bring forward today is the real-time hour chart. So we know that there's oftentimes little gaps that form, and sometimes, but not always, there are liquidity voids where there's no price that happened from 4 p.m. the previous day to 9:30 a.m. the next day. This was particularly intriguing because there were two liquidity voids here sitting, waiting for price to come back up. So we had pointed out a sell side liquidity that we were looking for price to come down to, and the rest of the day we see that we filled the entirety of that gap and then some. So that is something to keep in mind in your back pocket to see when things line up there. You can have a little bit more confidence in taking a trade to fill that gap. Let's bring over a daily chart here, and let's take a look. So yesterday we drew down, took out sell side liquidity, and then came all the way back up just to stop short as a sell candle. So I think that Wednesday, we're still within this range here. So Wednesday we would need to see movement down further down this area, or up to take out this high up here, this 15,469.5. Outside of that, we still have those relative equal lows down here. I don't know if we're going to take those out this week. We certainly have unemployment claims on Thursday at 8:30, which could cause a little bit of volatility, and Powell speaks at 12. So we could certainly have something like that, but there's nothing happening on Friday, so pretty standard week. Okay, so let's go down to the hourly for today. So on the hourly, if you recall from the previous couple of days, we had this buy side liquidity happen. We had this buy side liquidity happen the other day. We had this rejection block followed by this liquidity formed at London, which we marked out earlier. And we see price ended up heading towards this in the morning. We kind of anticipated heading down towards this relative equal low sell side liquidity. What we also marked out further down here, we can kind of see that there was sell side liquidity all the way down here, and it was a weekly level as well. So certainly price could take this out if it was willing to go up further. Now we know that this is our new week opening gap, so we went down took out our new week opening gap once more, took out a weekly low, and then picked up orders and continued to move upwards, took out a buy side liquidity here, and then traded down into this middle of this range. So right now we're in the smack dab middle of this range here, and it's kind of uncertain exactly which way this is going to run and expand yet. I don't have a good pulse on it, so we technically are we're still green on the week in terms of candle movement, so we're above new week opening gap, and we're also above New York at midnight, New York. So with those in mind, I tend to want to look for an expansion to the upside, but we technically are still in a macro downtrend and we haven't made a higher high yet. So what I'm thinking is we may end up coming up to take out this fair value gap, maybe taking out this short-term high, and then continuing back downwards to take out or head towards this rejection block. Let's go to the 15-minute. Take a look what happened here. So on the 15-minute, you can see that, and we have to see about 2 days worth of material to see it. So you can see that on today's price action, we started the day around here. Price had gone down formidably already before open, right? So price opens up, we head down, we see these over to the left, we see these as relative equal lows, and we wait. We wait for this to occur, and we anticipate there being a response at a weekly level. What does it do? It ends up retracing all the way to this short-term high, as well as taking out these short-term relative equal highs too. So as you can see, price came down, took liquidity, came up, took liquidity once more, came down to a bearish order block, defended it here, traded down further, defended it here, traded back down below it. Now in Asia, that's we're below it now, so we need to see it close below new week opening gap high and low for me to maintain a bearish stance. Let's head down to a 5-minute now, and we can start to see some of the fair value gaps here. Now, one I mentioned was this sell side imbalance, buy side imbalance, sell side inefficiency. Well, it would turn into a inversion fair value gap, and lo and behold, not only does it once, twice, 3 times, and then continues the day downwards. So the reason why I was thinking about that one is it was in the midpoint of this upswing, this shorter upswing, and I saw it as an equilibrium point, and I saw it in the middle of a sell side imbalance on the daily, these purple lines here. So I saw a daily level here that it rejected off before. So I was looking for it to give me that kind of a move. Some of the moves that we saw, let's see if there's anything else here. Yeah, pretty much took sell side liquidity, old new week opening gap, and then it head towards this sell side liquidity, which it took it as well. On the 5-minute, there's not a ton here, but if you go on the 1-minute, you go to the hour here, you can kind of see, and I blew it up for you there, but you can see that after taking that big weekly level right there, you see it trade below it, and then within 3 candles comes back above, kind of like dilly-dallies around for a few seconds. And then we see this form where we have price that forms a fair value gap, which is also above a previous short-term high. That's considered a mini market structure shift, and we now can see that price has a chance to go in here. You kind of lose out on the chances above here, but that is the nature of the game. And what happens after that? Well, we run for this area of liquidity. We run for this area of liquidity. And we run for this area of liquidity as well. So it's important to take a look at things from a macro scale, but also you need to understand what's going on the lower time frames too. A couple of the executions that we took, this green is around 8:30 or 8:20 here. And we can kind of see this was the first trade that we took. We see that we went long, got stopped out, right? Went short, had to deal with some drawdown here, but my bias switched because of my macro bias, and we took that down into profit. Now, unfortunately, I ended up taking a couple of risks over here, as you can see, and still ended up a pretty penny, about 48 bucks per account, and I was copying about four accounts today, so a little under 200 bucks, and then another 45, another 45 on top of that on the small accounts, the ones that I'm pulling out of drawdown just as an exercise. And so basically what we have is, you can see me get flustered a little bit. Wasn't my best. I also should not have been trading, trading during one of the breaks that I had a small break, because then you see all this stuff that you kind of have to monitor, right? So went short here, took out a chunk of the market here, right? And so I end up buying. Price doesn't really do anything, so I stopped myself out and end up going long, or going short here, which means I had to sit through a lot of barriers, and eventually we end up exiting around this monthly level, but we do obviously see that trade could have panned out much better. Not much better, but still better. So that's it for what happened today. There is one section here that I want to show. Requires me to zoom in a little bit. Get back to normal here. Okay. All right, so let's study this area, right? On the 1 minute, we see that fair value gap is formed at the close of that candle, that black one. We see a fair value gap is formed. After a higher time bias, which is 2000, whatever this yellow line is, 15060.75. So price took out that weekly higher time frame level, retraced immediately. Now there's no market structure shift just yet, because we don't have a short-term high higher than a previous high, but we do have a higher low. Same with what happens with this candle next, and this candle forms a fair value gap. So with that, that's the trade I would have taken, and that would have netted you a nice handsome 240 or 200 combo there. I would have given you a nice like $200 combo with that rise up to 15,236. So I think for tomorrow, if you're not done trading in the morning, just watch the FOMC members. If you want to trade, that's on you. I will probably not. I may not be trading, and we'll see though. We'll see if there's a spare time in between. So yeah, you saw that occur today. You can go rewatch the live, see when those trades kind of came through, and hopefully this was helpful as we think about the future. I think I'd have to look at the 60-minute for now, but if we were to peg the future price, I see that price is still lingering around the lower half of the range it's in right now. And what do I mean? That I mean this range to this range. Price is right around here. Okay. Man, I'm really tired. This job kind of does it to you. That's the tough part about doing the 9 to 5 sometimes is you're smoked, but got to make some time to study. Got to put in, like, even if you're only able to spend 5, 10, 20, 15 minutes studying, you still have to put that in. So I unfortunately have to close up for getting to another meeting. But yeah, so today had some live trades. Check them out. I wasn't very happy with the second one, but the first one definitely so. And tomorrow, let's see what happens in Asia and London, and then we'll find our levels and go from there. So good luck. Have a good night, and we will talk soon.